Hey everybody, welcome back to another episode of Debt Collection 101 here on Arbeit U.
Yes, and we have a very special episode, right? We are talking about banking and collections, correct?
Yep.
And who better to talk about banking than our banker, Ted?
Hi, how you doing?
Thanks for joining us.
Thanks for coming on.
Yeah, thanks for having me.
I got to shout out Marcom because they gave me this jacket. It actually is on the back. You can't see it. But yeah, shout out to Tim at Marcom. So if you guys want to send me more swag, I'll be happy to wear it. So, let's start off by telling us about yourself.
Yeah, so Ted Janicki, I actually work for Bank of America in our commercial lending group. I'm a business banker and manage a bunch of small businesses here locally, and been doing this for 15 years, so while I look rather young and dashing and whatnot, I have a lot of industry experience with, a multitude of different local industries, whether that's the debt collection industry or anything else. So, excited to be here and share my knowledge and see what we can do here.
Yeah, thank you for doing this.
Yeah, thanks.
Hopefully we won't drag you down.
Yeah, so you used to have a lot of business with collection agencies, right? You used to do a ton of work with them.
Correct.
And what was that like? What was the relationship? What were the things that you were doing with them?
Sure, yeah. So, I mean, what you really see with a lot of debt collection agencies is, especially the larger ones, it's kind of the ones that I really focused on, not kind of these smaller ones that are being run in small offices. But the larger ones are pretty cash centric, right? So you have a lot of cash to manage, and for any business, whether it's a debt collection industry or any other industry where you have a lot of cash to manage, there's a lot of different things, especially when it comes to account reconciliation and things like that need to be on track because, especially in the debt collection industry, there's a lot of inflows and outflows, right? Money coming in, money going out. Who's it coming from? From where is it coming from? Is it a check? Is it an ACH payment? Is it a credit card payment? And being able to actually manage and track all that and have a reconciliation system that does that, I think is absolutely key. Absolutely key. If there's one thing that a debt collection agency should spend on besides you guys,
great pitch. Well done.
It is actually account reconciliation and treasury services. So that should be a big expense that debt collection agencies use and invest in. So.
Yeah, I could see that for sure. Especially if you're like an agency, third party working other people's debt contingency, right? I know a lot of companies require like separate accounts for all that, right?
Yep.
You have to have separate accounts so that you're not spending that money, which is really theirs and stuff like that. So,
exactly. Yeah, there was setups where, there was some agencies where they would have 60, 70 accounts. And, and they would call me and they'd be like, hey, Ted, can you tell me who this payment came in from, yada, yada, yada. And it's be like, well, no, I can't because that's way too much work. You should be on this platform. And banks, and to be honest, like all banks have a platform that helps them reconcile their incoming and outgoing payments, right? And some are better than others, but all banks do it, and they all do it pretty similarly. So if you are not working with your banker as far as the type of reporting and customizable reporting that you need to manage the business efficiently, then you need to have a conversation with them and get that in place. So.
And we were kind of talking about this before the episode started, that banks are exiting collection industry.
Right.
Do you know the reasoning behind that, like why banks are choosing to do that?
Yeah, it's really, it comes down to reputational risk for a lot of the institutions. And, I will tell you, banks are looking at a number of different industries as to ones that they may not want to do business with. And, there's banks nationally, there's so many different directions that some banks want to go in. There's some banks that actually focus in on collection agencies, like that's who they want to do business with. There's other banks that don't. And it's not just the collection agency industry that banks are taking a hard look at. A lot of the upcoming marijuana business industry, which is a cash cow, which is going to be a huge economic boom to the states that are onboarding them. There's banks that just won't touch it. Well, there's other banks that will. So it's not collection agencies per se. It's just the nature of the beast and how banks want to go to market. You just got to find that niche and that institution that will work for you.
Yeah, that makes sense. It seems like that one kind of makes more sense, but one you were like said before, like the home health care or something.
That one blew our mind.
That one seems right. It seems like, once you kind of think, well, I guess there could be a big news story one day about that.
Big news story about abuse going on in the
That's a great point, right? Like there's probably 99% of all home health companies do a great job,
Yeah.
right? But you have the one that is beating people at their house, and it's too much of a risk. You know what I mean?
Yeah.
And that happens. I mean, especially, and I think that's why you see, like maybe like community banks or smaller banks will take on more riskier business
Yeah.
because they
Yeah.
haven't been burned by it. If you look at a national bank, let's say like Citi or Chase or something like that, where they have coast-to-coast presence, man, if they got burned in California, you better believe if they have some company that does the same thing in Idaho or New York or wherever, they're gonna start looking at it differently. So, you know, the ebbs and flows of banking,
Yeah, right?
exciting as it may be.
So if you're a collection agency, you would recommend partnering with like a small regional bank in the
Yes, yeah, definitely. Just you know, ask questions. You know, talk to bankers, talk to other people in the industry. Who are they doing banking with? How are they managing that? Because there are institutions that will onboard them and do a really good job with it. It's just finding the right fit for whatever your needs are.
Cool.
Yeah.
Yeah, and then you mentioned earlier, you know, managing all that different accounts and everything like that for collection agencies is what you think they should be spending money on and doing for sure. Is that something that banks do for the collection agency, or is there separate software that people are using for this?
No, banks will do it for the collection agencies. Some banks will contract it out and, you know, bring in like a vendor to do it for them. Some banks will design it themselves, but each bank should have its own treasury platform. Some are really, really good, some are really, really bad, some are really, really sophisticated, some aren't. It all depends, again, on what you need as a company. So, yeah, again, it's gonna be whatever that institution's gonna provide you, so.
Yeah. So if you haven't talked to your banker about it, make sure you
Make sure you talk to your banker about it.
Yes.
That's it.
Yeah.
Yeah.
You made that super easy on us.
Yeah.
Thank you.
Hey, no problem.
Yeah. So, let us know your thoughts. If you have any questions, banking questions, we can get them to Ted. He can get them back to you.
Yeah.
Submit them below, subscribe, and as always, see you next week.
Thanks for watching. See ya.